Yeah, so equity markets in general have proven fairly resilient to whether it be global trade tensions, rising interest rates, and it's really about the strength of the global economy in general. Earnings expectations have been extremely resilient as well. So all of this has been proven very supportive for the equity markets in general.
Which is amazing because a couple of years ago, I guess I'm old enough to remember that even like 12 months ago, there were some people saying that this market could not absorb, and this economy could not absorb higher interest rates, that there was just simply too much debt outstanding. It appears that that's been wrong.
Yeah, absolutely. I mean, with the global economy being so broadly based, like the strength in the global economy, I think you're seeing that feeding into to the equity markets. And like you said, being able to tolerate a higher interest rate environment for the consumer and for businesses.
Well, you up there in Montreal, where your firm is based, are paid to worry on behalf of your clients. So when you look out, Candice, what does worry you? Is it trade fights? Is it populism? Is it interest rates? Or is it something else that is in your mind, maybe the biggest variable or wild card for the global equity markets?
Yeah, so the biggest risk to that synchronous global expansion is really on the trade front and the potential for these protectionist measures to stifle the global expansion. But our expectation is that inevitably the economy is strong enough to counter, the impact on global trade. You've got the U.S. economy firing on all cylinders, even the Chinese economy relatively stable, and policymakers stepping in, expressing a willingness to support the economy and help to cushion the blow from these newly imposed tariffs. So in general, while trade headwinds are looming, we think that the global expansion will be enough to overshadow that.
Finish this sentence for us, please, Candice, if you would. The best place to invest around the world is what?
Emerging markets.
That's a lot. Can you be a little more specific?
So, well, in general, obviously, emerging markets have taken a brunt of the weakness, following the global trade tensions out there. But in our view, a lot of this weakness is likely overdone. And from a valuation perspective, there's a pretty decent buying opportunity in the emerging market space, particularly as the global economy is strong. There again, earnings growth in these emerging market economies. And again, from a valuation perspective, we think it's a good time to be buying.